Hello again, everyone. It's Vince Forer here from TradingWinds.com, and this is our update for April 10th, 2022. Let's take a quick look at how things finished off on Friday. We saw a bit of a mixed close overall. The Dow Jones Industrial Average up 123 points, and you can see here on the daily, it looks pretty good, right? Upsloping 20, bounce off that 20, looks pretty decent for a move to the upside. If we look at the longer term charts, the weekly, we're just below the 20 and looking like we may come back to retest this prior low. And the monthly still looks okay. This week was really a nothing week. We have a small little doji there. That's the monthly bar so far, but that's what we see so far this month, about 10 days in, and not a whole lot to go on, but still overall a bullish picture. Now, if we look at the S&P 500, which was down almost 13 points on Friday, it's pretty much the same thing. On the monthly, we're still looking bullish. We have not been able to overcome that high from last month, so no official trigger to the long side yet on the monthly time frame. The weekly looks suspect, looking more like a short, while the daily still looking okay. But when we get to the NASDAQ and the Russell here, the NASDAQ down 209 points on Friday. You can see that's a pretty significant move back below the 20 on the daily time frame, and we closed out at the low of the day. So not a good sign at all. And if we look at the weekly, that's a pretty convincing short setup on the weekly time frame. While on the monthly, yes, we're still above the 20. We have not overcome last month's high, so not an official trigger yet. We're still okay. There's still a couple weeks left in the month, so we'll see how this turns out. But so far, this is starting to look bearish. Well, it is looking bearish on the weekly and the daily time frame. Just like the Russell 2000. Have a look at the Russell 2000 down almost 15 points on Friday. And after getting back to this channel high, we got a nice big rejection. We're already halfway back down to the low of that channel. If we look at the weekly chart, it's pretty clear. Rejection at that 20. Once again, a very bearish look. And on the monthly, this actually looks very bearish right now as well. We're getting rejected at that 20 so far. So again, this candle not closed. We have a couple more weeks, but that is not a good look at all. And if we break this down by the different sectors here, using the ETS for the different sectors, energy once again coming out on top and just about at a new all-time high here. Actually, is it an all-time high? Let me double check. No, it's not an all-time high, but certainly a new 52-week high, and looking like another breakout here. So after a bit of a pause, we're looking pretty strong once again. Financials, not so much. We are still below that 20 and struggling to get back above it. Very choppy price action there. If we look at technology, we've dipped below the 20 now, and closing a lot closer to the lows here this Friday. So it looks like we may come all the way back to retest these lows here. Consumer staples looking pretty good, continuing to roll here and looking pretty strong. Same with utilities, looking very strong. Healthcare as well. So we have a few sectors: energy, utilities, healthcare, all looking pretty good here. And while consumer discretionaries are now back below the 20, not looking good at all. Real estate, pretty good so far. So what I'm trying to get to here as we go through these is that it's pretty much a split between bullish looking and bearish looking charts for the different sectors here. So we're really at a spot in the markets where it's interesting because both the Dow and the S&P are still looking more bullish than bearish here, the way we ended off the week. But the NASDAQ and the Russell are pretty convincingly bearish, right? And then we get to the sectors, and it's pretty much a split as well. If we look at XLRE industrials, well, we're looking pretty bearish here. Materials, not bad. Bouncing off that 20 on Thursday, following through on Friday, looking pretty good. Communication sector finished just below that 20, while the retail sector trying to get back above the 20, but unable to do so far. So again, it's a pretty even split overall for the sector charts. And, we look at crude oil, it's on the daily, trying to hold this area of support near 95. Still pretty far from that 20. But remember, the XLE, the whole energy sector, looking pretty good. Gold up about 8 points on Friday, back above that 20 on the daily. And the dollar index also continues to gain here, although it did finish off its highs. So overall, again, a mixed picture is the best way we can describe it right now. So in this kind of environment, just as a reminder, you want either an equal number of longs and shorts out there, or you want to ease up and scale back on your sizing for each position, because this can go either way at the moment. If we look at the data points, economic data points coming up this week on Monday, really there's nothing of interest except for again, FOMC members speaking who may make a comment that could sway the market. On Tuesday, though, we get the core CPI number. That'll be a biggie. We get the Red Book report and the federal budget balance. On Wednesday, we get MBA mortgage apps. We get core PPI. We get crude oil inventories. That'll be important as well. And on Thursday, we get the usual jobless claims number. We also get core retail sales number. We get consumer sentiment as well. We get more FOMC members speaking. And on Friday, it will be a holiday, Good Friday here. So nothing there. So again, we're sort of at that spot where we can say we're in between. We've got a pretty decent picture on the Dow and the S&P, but quite a negative looking one on the NASDAQ and especially the Russell. So we'll tread lightly here and we'll take it one day at a time. Monday, that's tomorrow, April 11th, we'll kick off another live market chat at 1 p.m. Eastern. Until then, enjoy the rest of your weekend, and we'll see you on our next update.